Greetings. Welcome, everyone. Welcome, Market Rebels, to this week's macro measure, where we're going to be taking a quick overview of the major markets and other factors. This is September 4th, 2022, and it's a little bit in front of 1 p.m. here on the East Coast. I'm going to get a few things flashed for us. It allows me to. Let's see. And then we will be on our way. I've got to let you all know ahead of time that we've been doing these for a year, but macro measure is the new name. So this is almost like the first new episode under macro measure, and the way we're splitting things up a little bit more now. Here's our disclaimer. If you could please take a look at that. And then here is the intellectual property rights notice as well. Again, if you haven't seen this before, I'm Wayne Razzie. My partner, Ryan Mastro, is working on this week's market outlook. And I have had a morning to forget. I will get into that briefly. I have been fighting with, it seems like there might be maintenance going on. I've had about a 3.5-hour nightmare just to get to this point with Thinkorswim. They are, there's either maintenance there or the new Windows update has really undermined me pretty bad. And it's just been a real struggle this morning. Everything that seems like it could go wrong did go wrong. What I wanted to do, though, let's do this really quickly. I'll flip back here because I'm really now trying to make sure I don't have any more recording issues. I've had problems with Zoom as well. I don't know what's going on. I really don't. I feel like someone's almost playing cruel jokes on me. But what I wanted to get at was last week really quickly. Then we'll take a look at some of this stuff news-wise that I've got ready that I lost notes on, unfortunately, because of Windows, I think. But whatever, it's just one of those tech nightmare days. The deal on this is looking at the SPY. This is really about the last year. And I think we were still saying, of course, we always consider that there's possibilities, but I think our favorite scenario or most likely scenario was that we would see more than likely see the selling continue. And if we broke through 400, then our next level would be 390. And that actually tended to work out again this week. So it seems like the technicals are staying pretty true from week to week for us, which is good. We also, I think, noted at some during the week that if we did slide through here, find support, there might be a little attempt to get back up and test the 50 there in gold from the underside. And the gang was able to do that. And then, of course, more news hit the tape. I think it was the Gazprom news, and then all hell broke loose again. So really an interesting finish to the week, which will lead into our discussion of the new week. But the new week would begin right here, if it unchanged, just a little bit above that 390-ish support, which we were calling the line in the sand. That was what was asked of us in our Rebel Pit room. This was our big level once we got through 400, and it did hold. So we've got to give it credit there. But if we look down here on the RSI, you're looking at an RSI reading, and you'll see that RSI reading over here to the far left, but you'll see that we are at about 34. So we're approaching oversold. We're not quite exactly at oversold. There are gaps. I've removed all the drawings on here so that it wasn't overwhelming, because I'm embarrassed to say this is my simple view, and the chart drawings just make it even worse. But this area here has a gap, and this area here still technically has a gap. And so the way things finish, to me, I feel as though you could make the argument that there's room for a quick little support, right? Because you're getting there. At the same time, usually what we've seen is when things all kind of like all hell's breaking loose and you get towards oversold, that you probably flush lower, even more so. That's probably the main scenario at this point in my mind, from what I've looked at this weekend and since the close of Friday's trade. It's been, again, a tech nightmare to even get that far. But what I wanted to show is, and we always note this, that of course news could upend things. So my son sent me this tweet and said, look, do you realize what's happening there on Monday? Did you know Powell was speaking? I did not. So if this is accurate, I'm not positive that it is, but if this is accurate, then this could be a big deal. It's about 20 minutes prior to the market opening, it looks like. So that's a big deal that would be a big deal on this upcoming week. I think it would be on, I've said the wrong day, but I think it would be on Thursday. So that the week could really hinge on that right there. So we'll see what happens. That's a big deal though to keep in mind. Clearly, like we love to keep that heavy duty, high profile news stuff, especially the Fed stuff, really in the front of your mind, so you know when the market may start to pivot in front of that and how it's likely to pivot after. Here's just a little glimpse of a few things. Really, they've only taken about $139 billion off of the Fed balance sheet. And just keep in mind, right, that that's supposedly going to ratchet up to 95 billion per month. And you could see, right, we know what's happened this year since this began. And well, even from the start of the year, we know what happened, of course, but this market's been really living on QT for so long. I wonder what happens when QE for so long. I wonder what happens when there's some real attempt at QT all over again. So just keep that in mind. This is a quick view of insider selling. So this is what's happening right now as things are getting rough in the markets again, right after that big move that we saw. It started to pick up apparently again. And this is the seasonality that I've seen in a few different places, but you can see that as we get into the very first full week, we might have some weakness. Mid-month, we tend to consolidate that. And then in the latter half of the month, things start to roll over again. And that could be the way things play out. We'll have to see. Just to give folks an idea on things, here's your another view of it, right? Insider transactions ratio of bullish bearish, right? So that's really starting to pick up right there in a big way. That's, here's July, here's August. So just keep that in mind. These guys are not perfect in their timing, but they're often pretty good. If you look at some of the things that have happened in the past, some especially high profile companies, they're pretty good in their timing of letting shares go. Another thing would be that we've got this, depending on how you want to look at each major wave in a bull market. I'm sorry, again, bear market. I'm a little flustered from just dealing with fighting tech. I'm kind of rushing as a result because the tech has just undermined me for 3.5 hours. But the second and third portions, phases, if you will, stages, right, of a bear market, it tends to be back end loaded, as they're noting here. Callum Thomas is noting here. So just something to keep in mind that if you're wondering, what about what's coming, right? What's on the way? And I'll go back to the charts now, but my simple way of looking at it that I've been talking about now for, it seems like late last year through all of this year, was really just that, look, the American economy has become incredibly debt dependent. The stock market's become incredibly QE dependent, low interest rate dependent. And furthermore, housing is a massive part of the American economy these days, and it's very dependent upon what's happening in housing. And I think a lot of the developments, obviously higher rates, inflation, stagnating wages, those kinds of things, none of that stuff is good, right? Or real wages dropping. And then when the affordability of homes really goes up on a monthly basis due to these interest rate increases, and consumers are getting pinched and squeezed on a lot of their consumption due to inflation, just not a really good picture when you're so dependent upon credit, right? That's really where we are, in my opinion. It's just a simple way to look at it. Now, we haven't seen massive waves of layoffs yet, but some of the forward-looking data is suggesting that we will. Productivity is really crushed. I don't have that graphic, but productivity, you can look that up, of course. Productivity is crushed. That's looking horrendous. Europe, due to this, is already in trouble, right, for various reasons. But this energy crisis is making remaining in business an incredible challenge for a lot of the smaller and mid-sized business owners and manufacturers even. And so if that does start to become that prohibitive, which it seems like it is in terms of main costs, there could be shutdowns, there could be mass layoffs, and then that just exacerbates the situation. over there in Europe, which is obviously a really important region in the world economy. So with all these things happening, uh, I think the excess liquidity has really been the big thing in the US over the last, say, 13 to 14 years. And that appears to be happening, being pulled away while all these other pretty horrendous things are developing and happening. So to me, that's where you start to get into the employment could finally roll over, right? Because if the US isn't able to export at the same rate, and because other places are hurting faster, it just all eventually catches up with you. So the final thing I would note just on the news front is that there really isn't the sentiment from what I've seen isn't horrendous yet, which means, it's not super bearish, so which is contrarian. So it's not so bad. That means there's more potential to follow. And then of course, so the claims are everyone's a bear, stocks are cheap. I don't think either is true at this point. I'm not saying that we can't bottom soon. Maybe we will. But I'm just saying that I don't think a lot of these arguments that I'm hearing on the TV are really valid at this point from the data that I've been able to review. And the other factor is that the CTAs and other major players in the markets flipped bullishly and really went a lot longer stocks at these levels up here. After being bears, they flipped back to bulls, and they did it in a big way. And so there's a lot of, just as there were some trap shorts on the way up, there's still, I believe, a lot of trap longs that behave tactically that are maybe going to get really in trouble if these lows get taken out. So having said all that, that's kind of our preamble to understanding what may be happening in these charts right now. And so I think you're getting close to oversold, right? We know that that's where we left off. But if you look at some of these rate of change bars that I've got right here, give you an idea. This second wave of selling, after we had this initial wave of selling down, right? Then we lifted up a little bit in front of, I think, Jackson Hole. Now we've got another wave lower, and this hasn't really reached quite as far down. RSI has gotten a little bit lower, but you can see that at some other turning points, it was definitely far lower. Here's a nice one here. In terms of a short-term turning point as well, there's a little positive divergence right there on the RSI there. But coming back over to here, when we get pretty oversold and there's at least a relief rally, you've definitely been lower. So RSI has room to fall, and as does the rate of change. It's not as bad as it looked. And I think another couple minor points, but still certainly possibly important points, are that this is the old outside day, AKA, an outside day reversal type bar, or in the case of candles, bearish engulfing, right? So you've got this bearish engulfing type of activity developing after we failed to take out the 50. And this is kind of really late summer action. You start getting these really low volume totals. But this, you could see on these selling days, the volume really picked up. And after that little rally attempt they tried to put together there, this was kind of a really ugly finish. Now, the problem with that, though, is that trading was very thin. I can tell from all the UOA that I watch all day, every day, for the UOA-based services that we have, that it was thin. It was just thin trade. It just wasn't a typical day compared to normal or compared to recent days. So that's why it's hard when you get near these long holiday weekends and holiday phases, because a lot of the things you would typically interpret a certain way, you almost have to put a caveat there. So that's kind of the caveat, is that, yeah, this is pretty bad. Yeah, it may matter, but if it were a normal trading environment, I think I'd be a little more bearish about that factor only, with this reversal candle, bearish engulfing style candle with this heavier volume. Maybe it matters. Your gap levels here. I think I'm trying to keep my lines off the charts as much as I can, because it'll make it too messy. But I'm thinking that really down another $5 below the low puts us at about another level, which would be 385-ish in the SPY. Another level I think comes in right about here. Let's call that 375. And then beyond that, you probably have to look at right in here would be another 371. just a couple of different levels to throw out there. There's a little gap, as I noted here, I believe still, so we can focus on that. But I think what I'd rather do is look at this bigger picture stuff and then start moving a little more quickly. But just here's your bigger picture view on the weekly, and you're at 43-ish on the RSI over here. So definitely more room to fall. I think if you look at it on the weekly picture, you can see there's the 150 weekly there in that brownish rust color that's coming in there. And that would probably line up with one of our daily levels as well that we noted. So that would be an area that I would say, look, that's probably where you see some support if we continue to fall. Right now, here's your big monthly picture on things. And right now, the RSI, as you can see over in the far left, lower far left, is near 48. So definitely more room to come down. So with the seasonality being what it is, I'm thinking right now, going back to a closer look, I'm thinking maybe we see a little bit more drop at the first part of the week. And then maybe what they try to do is start having sort of an anticipatory rally in attempt, at least with Powell on Thursday, where they'll maybe think he'll soften things up because maybe the European situation, maybe the global situation, maybe really the signs of the US situation deteriorating. That definitely wouldn't shock me if that were to happen. But if we don't get further selling beyond just hitting the next support level down and holding there, right, then you'd have to say, well, what can happen next, right? What can they do next? What they can do next, I think, is we could probably drop a line across here. And I think that would sort of, if they do sort of come down a little bit more towards, let's call it 380, that 385 doesn't hold, you have a little bit more selling, then I think they would maybe try to come back up to here. And I think that's where the 50 will kind of all work out to. It'll all sort of work out to where they try to really get back above that 400 level again. If there is some relief rally attempt, I think that could be the big tell, right? If it can't get through there again, then the second half of September could play out much like the seasonality suggests, which is ugly. And then maybe you do get the full retest of these lows, but I don't think you can like things right now. I don't know what the weekend news will do to impact things. It's very hard to like these charts at this stage. You almost need to, let me just try to erase these drawings. You almost need to see more action and see if it supports at a certain level, see if we start seeing these overbought, oversold measures start to show us any information as well, see what develops in volume, see what develops in candle wise, et cetera, all the various things you can look to inform you as to what's happening. But with the short-term SMAs there in white and in blue, light blue and in red, and the long terms mostly rolling over, except for maybe the 50, the longer terms, midterm there and 50, it doesn't look good. I mean, you just can't really say, yeah, this looks great. Now, you could start changing your tune if we find support and they start to work with it. But as of right now, I would still be leaning more bear, and that's what we decided really going out. I would have overrolled and stayed bearish if I were holding positions the way that was my best way to look at it. I think you had to take some profit and delta off the table with this reversal and the nice movement we saw. But I think I would stay in it to an extent and see if there can be a little bit more. Maybe at least you come back and close the gap down there. And really, I spent most of the time on the SPY, but there's just not a lot of differentiation. Wherever we go and look at, say, we'll look at diamonds next since I punched them up, you're going to see that there as well, right? You're going to see a very similar profile because this is why sector situation video, which I'll do later, it's a lot of the correlations are going towards one. Most things are behaving in line with the overall market. We chart the ETFs, major index ETFs, instead of the SPX, et cetera, because folks like to be able to possibly craft trades off of these, and they'd rather have the SPY levels and the diamond levels and the Qs levels. So that's why we stick with those. But these all do look similar, and you can tell that it's very similar action. So again, that's more indicative of risk off. we're just seeing the risk off type of behavior that we do when the whole market just gets sold. And there's maybe you shouldn't say the whole market, but they're not as discriminate. It's kind of like sell, 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 sell whatever you can. You can see there's a line I had here in IWM. This was right. This stopped where we thought it should at least attempt to. It held. So that's the kind of, you got to give the bulls a little credit in that sense. So it's probably a tough call for Tuesday morning, frankly. But overall, if I had to side one way or the other, I'm still siding bearishly until I'm going to stick with this trend until I see some signs and we just haven't seen them yet. This is also approaching oversold at 35 on the daily, not there yet. And then let's just delve down to a half a day chart. And on the half a day chart, it's already oversold. So that's, again, we're in that dilemma of if they want to keep moving these things down, you can't be shocked if they hold at some point and try to put a little relief rally together and then go again, because things are finishing in an oversold way. QQQs, let's take a look at those. The Qs are also on flatline support. You can see that right near here, and this dovetails or combines really with back here with this level. There's an orange line that I've got drawn there near the 296 level. So it's pretty close, but again, just an ugly finish. I would have to say breaking this support level here that I've got. I'll try to get back to the arrow for that one. And that's that got broken. SMA is all rolling over except for, again, maybe the 50 isn't down sloping, but virtually all the rest of them are. So not a good look. And I would say that if I had to pick the next big movement out of all this stuff, and I threw seasonality away, I would say, look, the next big move is to come test lower levels. That would just be how it's the way it went out. It's the way it looks. We know they're great at short-term shenanigans, but that's the way that it all looks right now. We don't have Tuesday's opening to work with yet. And I would be favoring that to just test levels. And the levels, you can get obviously from Ryan. He puts them out. We put them out every week in Market Outlook so that people, and they're on SPY, QQQ, DIA, IWM, because that's what folks like to possibly trade and use the actual levels we provide as a guideline for managing your risk in other stocks. But they'll use those to trade the markets, which is fine. There's nothing wrong with that if that's what you want to do. Always traders call. Let's look at a few other important things and then we'll wrap up. We have DXY. The dollar's been really, really strong of late, and I've been making that case that that's not really typically a good thing these days for stocks. It's getting towards the upper Bollinger. It's getting it did stall there for a while, and so that could give it some power to maybe go through, even though it's kind of stretched a little bit from the trend at this point. So let's see if we can get just a quick line on here to give us an idea where we go to. And if it does break out, I would say, look, it probably goes up another I'm going to say maybe like 2 to 3% from here for starters. But we've seen it get a little overdone outside of Bollinger Bands several times, and then it does. Once it does that, it usually does pull back a little bit. And as of Friday, despite the move, it's only at 69. So yes, it's oversold. I'm sorry, overbought. But at the same time, we know that it can get, it definitely has a tendency to get a little bit more. So that'll be very interesting to watch, where if it does make a new high and it can't keep making new highs and reverses, maybe loses the 10 SMA, that would be an interesting development. And hopefully that would help stocks, as it tends to do. The 10-year yield, similar but different. We've been charting this one all year, noting that the dollar rising, the yields rising, typically not good for stocks this year. You could overlay that and you'll see that that's almost like an inverse relationship. But the 10-year yield, these are all, along with the dollar, both getting up there a little bit. But I wouldn't be shocked if it tries to at least make it a little bit closer and test this, even though it might start to be a little bit overbought-ish. That, even though you don't really, that's probably a bad way to describe really what's happening here with yields, since we're not really trading the yield, but you get the idea in terms of how far this has moved. And the RSI near 64 is telling you you're getting there, but you're not quite there. So when the Bollinger Bands or this this close together, this pinch, it's really not that big of a deal to even reference them. But that held together nice after correcting for a while, and now it's on the march back up. It's taken out a lot of highs. It's right near this high. It can take that high out. There's only really this group up here. So we need to see if it can get back above this high in here. And then if it does that, which really is Thursday's high, then we'll have to see what it does once it approaches there. But that's, to me, right, if you look at this change in complexion on 8-2 after the tremendous run we had in stocks, these were correcting dollar DXY. You could see that these really started to bottom out earlier in August and started moving back up. And if we then bring back the SPY back, then we'll see that that also started topping out near the same times. Not exactly, like I said, the correlation, inverse correlation isn't perfect, but once those were underway and moving higher, this became problematic for the market. So I've been trying to share that. Let's take a look at the VIX, and we'll get soon. We'll get close to wrapping up. VIX, right? This retreated. I think this is really more of a late summer, long holiday weekend effect, more so than reflective of maybe where it should be, given that there could be a retest underway. So I would expect this to quickly recover if it does look like we're on the way to another retest this week. And again, probably, I'm guessing, again, the early part of the week is a better time for them to do that, because we know that hope springs eternal whenever the Fed is speaking. Of Jerome Powell, none other than the Fed chairman is speaking, apparently on Thursday morning, and I had lost track of that. So that's mainly what I wanted to cover. Two last things are CL. Let's take a look at the late sweet crude futures. This was requested, and this is really its own thing. But so it's if you don't mention all the factors that are out there that are impacting energy and the market in energy, I think that's something you really should do. It's its own thing. You really should be heavy duty into energy analysis, and rather than just looking at it like another stock, for example. But having said that, right, this is looking kind of challenged right now, and you can see that it's right near the lows. So we have a little bit of a break between that and the XLE energy sector ETF. This is still maintaining more of a medium-term uptrend, and still maybe a resumption of the larger picture trend that it's been in for a while. It's still maintaining that, but you can see this line I've got there in orange, and this would put a lower high end versus here if this were to fail. So I know a lot of people are super bulled up, and it kind of makes sense to me to be bullish on energy, just without being an energy news expert, energy fundamentals expert by far. But we have to be cognizant of the fact that this low, this high developed, and now we could be about to lose support and maybe on the way to retest. And that would also seemingly not be good in a way, right? You can look at it both ways. Wouldn't be great for the world economy, but it would be good for consumers, right? You would think a strong economy should produce strong demand for energy, and they're not, right? And that's sort of, I think, telling you that. But then energy does have its own factors. And then finally, just a couple other things like LB, lumber. We've been talking about how important housing is to the modern, I guess I'm not getting LB. It's not giving me LB. Oh, /LB is not bringing up what it should here. Let's see, previous. All right, let's just take a look at this September future. But here's what it looks like, and you can see that this is also, if things are really still great out there, as some are claiming, due to jobs, which I think are really on the verge of seeing some rough stuff in terms of layoffs. I hope not, but that's where I think things are going. And you could see that this is near the lows, and so energy approaching important lows, lumber approaching important lows, and then the futures copper also rolling over. So these are not things that typically signal great times ahead when you see this type of behavior, especially right the way the dollar is hanging in there and yields to this point are hanging in there. So I'm going to wrap it on that note, and I will be doing a sector situation video. And my apologies for sort of the lack of smoothness during this video, but I've had to fight, as I said, 3.5 hours just to get this to record. I think a Windows update combined with some Thinkorswim over the weekend maintenance potentially has just really monkey wrenched everything. And I'm concerned that I won't even be able to record. So because of how I've tried several times only to have it shut off on me after I've gotten started. So hopefully things will get smoother from here. We'll take care of sector situation. I hope everyone has a safe and wonderful conclusion to their Labor Day weekend 2022. And we'll see you in updates and also in the services and webinars this week. Thank you.